Hey, welcome back. It's Jason Walter here. In this video, I share some news that mortgage applications decreased last week. So I'm going to share some news regarding that and some implications as well. I'm also going to give you an update about mortgage loan forbearances, and stick to the end of this video because I'm going to share some real estate stats for August that are hard to believe. And before that, please subscribe to this channel if you haven't done so already, and hit the like button if you appreciate real estate market videos like these. All right, let's go ahead and dive into the video. According to the Mortgage Bankers Association, or the MBA, mortgage applications decreased 2% from the previous week. It states in this report that interest rates have been below 3.5% for 5 months now. So perhaps refinancing demand is slowing and won't pick up again unless interest rates drop significantly. However, about 62% of all the mortgage applications right now are from refinancing. And so people are still taking advantage of record low interest rates, which, by the way, according to Freddie Mac, the average 30-year fixed mortgage interest rate is 2.91%. Freddie Mac's chief economist stated the following: "These rates continue to incentivize potential buyers in the home buying season, which shifted from spring to summer, will likely continue into the fall." Meanwhile, according to the MBA, mortgage loan forbearances remain flat at 7.2%. This equates to around 3.6 million homeowners who are currently in mortgage loan forbearance. Also in this report by the MBA had a really good point here that was sad yet true, and it said the loss of enhanced unemployment insurance benefits, that was that $600 per week in federal boost to unemployment, coupled with consistently high rate of layoffs and uncertainty about the job market, are having a disproportionate impact on FHA and VA borrowers. And by the way, these are loans that require a minimum down payment. So for an FHA, the minimum down payment for an FHA loan is 3.5%. For VA, it is 0%. So if home prices were to decrease, which eventually they have to, these people may be in hot water because they have little equity in their homes to begin with. This obviously would affect people who have purchased a house recently with minimum down payment, assuming that home prices go down, which who knows when they're going to be going down. In other real estate news, Pinterest reportedly paid $89.5 million to break their lease in San Francisco. The company cited that the reasoning was due to work-at-home arrangements due to COVID-19. For those who know me and who followed my channel, you know I do not speculate. However, if I was to make one speculation, in my personal opinion, we're going to see more and more of these vacancies of commercial buildings or office spaces because more and more employers are allowing their employees to work from home. For example, other companies like Facebook and Apple are allowing their employees to work from home, and the CEO of Twitter announced a few months ago that they are allowing their employees to work indefinitely from home. If their employees take them up on that, obviously they're not going to need as much space as they once thought they needed before this pandemic started. Meanwhile, according to a recent survey, 2 out of 3 tech workers would leave San Francisco permanently if they could work remotely. People are moving to Sacramento, for example, where the cost of living is much cheaper and you can get more space for your dollar. As you can see here, Redfin reported that Sacramento was the most popular migration city in the country in July. I actually ran a search on Google Trends over the last 12 months and found that the search term homes for sale in Sacramento peaked at the end of July of this year. I'm a realtor here in Sacramento, California, and I've witnessed a huge amount of people relocating to the Sacramento area, especially from the Bay Area. And by the way, if you're thinking about moving to Sacramento, I have a ton of videos about what it's like to live in Sacramento. I'll leave a link in the description below for you. Okay, as promised, I want to share some real estate stats for August, and that's reported by Redfin. So let me share my screen with you right now. So they're reporting that pending home sales is up 20% and prices are up 11%. And this is for a 4-week period ending August 23rd. All right, they have some great stats I want to share with you. So new listings, let's talk about that, of single family homes in the US. They are slightly higher than last year. So as you can see here, new listings really dropped drastically starting in March all the way through May. But ever since May, they have shot up drastically. However, over the past 1 month, the new listings has really been more or less flat in the United States, according to Redfin. But we're up 4.1% year over year, according to Redfin. They also have a great graphic here of active listings. So this would be active listing inventory in the United States. And they have 2018 versus 19 and also compared to this year. So as you can see here, we dropped drastically in the number of active listings in the United States ever since around June or July of this year, and far below what we saw in 2019 and 2018. And again, this is the number of houses available for sale. So we're looking at 28% less year over year this year compared to last year. Okay, let's look at pending sales in the United States according to Redfin over this 4-week rolling average as of August 23rd. So as you can see here, pending sales were in line with 2018 and 2019 all the way until this pandemic hit, which really was in March. So you can see there in March, April, our pending sales dropped drastically. People took their houses off the market. Agents weren't allowed to meet with their clients face to face. So obviously pending sales, the number of home sales decreased as well. So you can see the really steep drop ever since May, but ever since May, a sharp increase that they basically met with 2018, 2019 in around June time, and then have shot up drastically above what we saw last year and the year before. So now we're at 20% more pending sales compared to last year, which is quite remarkable given the economic uncertainty, the high unemployment rate, and also we're in the middle of this pandemic. Everyone's always asking about home prices and how they're affected by this pandemic. I made a bunch of videos about this as well. So they have a great graphic here showing January to December and comparing 2019 to 2018. So I can see here again, 2018 is this gray line, 2019 is this line, and then also 2020 is right here. So these again are home prices. So home prices really dipped right around the time we had this pandemic in March and April, but not very much. And this is because of low inventory across the US. But ever since May, home prices have increased, and they increase at a much higher rate than the past 2 years, which is quite remarkable. So as of August 23rd, we're at 11% year over year increase in home prices compared to the prior year. Homes are also selling very quickly. So also according to this report, they're saying that 46.6% of the listings out there in the United States are selling within 2 weeks. You compare that to the prior year, it was 32.5%. So a significant increase of houses that are selling much quicker. In addition, houses in the United States are selling very close to their asking price. So as of August 23rd, for that 4-week rolling average, they were selling at 99.2% of the list price. I hope you enjoyed watching this real estate market update. And if you did, please hit the like button. I greatly would appreciate that. Also, don't forget, if you want a free stock valued up to $1,600, then click on the link below, because for a limited time, WeBull is giving away 1 free stock when you deposit at least $100 within 30 days of signing up. Please subscribe to this channel if you haven't done so already. And also, you can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you in the next video.